Hello, Oracles. Well, these rallies just keep getting shorter and shorter, which to me is kind of a good sign because that means we're probably getting closer to a bottom. Or if we've already hit the bottom, we're getting closer to the point where there's not going to be any sellers anymore because there's clearly not as many buyers, and the buyers that are coming in are short-lived. So eventually we're going to get to a point where there's going to be really nobody buying and everybody's just waiting, and then eventually we can find that bottom and we can turn back around. So today we saw Tesla was down 5%, the S&P was down 2%, the NASDAQ was down 3%. Wasn't a pretty day. This could be in anticipation of Jerome Powell speaking tomorrow, could be in anticipation of the finalized GDP numbers coming out for Q1. A couple of things going on, so we'll see. Those are the only things I can think of that are probably drawing down the market today. So this again, is just the uncertainty. And when you're in a market like this, you're in a bear market and negative anything is just going to be magnified even more. So we did see a little bit of green last week, it was nice, and then we fell today. So what am I looking at going forward here? Well, I'm starting to take a look at, coming up to Q2 numbers, what can we expect? So looking at we're getting into a recession potentially, again, we'll get the finalized GDP numbers coming out tomorrow, and then end of July, we'll get the initial GDP numbers for Q2. That could tell us whether the economy is in a recession or not. And then there's earnings recessions. And this is where companies come in with their earnings with lower earnings than they had previously. So this is something that could also go on. And being in retail myself, I see numbers like this all the time. So what it's going to come down to is, could go by sectors, could go by companies. You want to pay attention to demand and how smart were these companies when it came to bringing in inventory. Because if companies brought in a large amount of inventory at very high prices and we get to a point where demand starts to wane, that means that companies are going to be taking massive hits on this inventory. So where they saw potentially high margins previously, those margins are going to shrink significantly. And if they brought in product, a lot of it, with a lot of inventory at a very high cost, and demand completely goes away, they might actually have to take a negative hit on some of this inventory. So in turn, this itself could lead to a recession and to lower inflation in the future. So it's not technically a bad thing if this is where we're trying to go when it comes to bringing down inflation, but it's going to be a hit to these companies and it could be a hit to the market as well. So to pay attention to these companies as we go into earnings, who is smart with their inventory, who's got high margins still, that gives companies pricing power. Tesla is one of the ones that we talk about all the time when it comes to pricing power. They have very high demand. They have a lot of supply and inventory coming in. They've already spoken about it to us in the past about, they've got this pricing that they're going up on for their vehicles because they're anticipating potentially higher costs in the future. So they're already offsetting that based upon the prices they're setting for vehicles now and factoring in lead time. So Tesla has already had this whole plan in place. There's a lot of other companies out there that have not. When it comes to like construction retail, which is what I work in currently, we're a company who has been doing very well. We're starting to have a lot of inventory hitting right now. And while the costs were a little bit higher on that inventory, we still have a lot of demand at the moment that is going to move this. Now, there's other companies in the area that have actually gone under during this time. I couldn't believe it myself, thinking about how big construction has been over the last 2 years. Just a massive boom in the housing market, yet companies were going under. And it's because they did not prepare properly. They didn't actually get inventory before all of the supply chain issues hit, so they had nothing to sell. So they had no money coming in, and by the time supplies were starting to catch up, they couldn't buy any. So they never stayed ahead of the curve. And so companies who did stay ahead of the curve were fine, but they also wanted to be careful that they didn't bring in too much inventory, because if you brought in too much inventory, then you're sitting on it. And it looks like we could be coming up to a little bit of a housing market correction. And if that happens, that could drop off significantly when it comes to demand. And now all of a sudden we're running into the same problem where even the smart companies are sitting on a big bag of expensive inventory that they need to sell. So this is where earnings are going to come in, and pay attention to this when we get to earnings season. When it comes to all of these companies, pay attention to this for any companies who have to carry any inventory. because carrying that inventory is going to be a problem if they do not have an exit strategy. So this is what I want to pay attention to going forward when it comes to Q2 earnings, because again, this is what's going to lead to pricing power, and going into a recession, pricing power is going to rule the day. You're going to want to have cash on hand, cash flow coming in, and that pricing power, because that pricing power is what's going to help you alleviate any over inventory stock that you have that can then thin yourself out but still continue to have cash flow coming through. And so things I'm going to be paying attention to tomorrow, obviously we're going to be paying attention to the GDP numbers we're getting from Q1. We're going to be paying attention to what Jerome Powell has to say. We have the Fed also going to be debating whether they're going to be going with a 50 basis point hike or a 75 basis point hike coming at the end of July for the next FOMC meeting. So this could fluctuate the market as well. That could have been another reason why we saw a little bit of a sell-off today, with 75 basis point hike back on the table when we were thinking that a 50 basis point hike is what we were going to see for July. So again, we do have the CPI data coming out in mid-July to let us know how we saw June going, and with oil prices that were still going up, we could still see elevated inflation. And we saw oil prices actually going back up again today, which is probably another reason why we saw a bit of red in the market. The VIX was starting to climb back up. That's the volatility index. So again, like we've said before, we are not out of the woods. We were enjoying that little bit of a rally that we had last week. We were hoping it was going to go longer. And who knows, maybe we're going to get some information tomorrow, and maybe the sell-off today was just the uncertainty behind what we're going to learn tomorrow. And we're going to get some clarity, and we could continue rallying for the rest of the week. So many unknowns, so much fluctuation in the market at the moment, so hard to predict these near-term situations that are going on. But again, when you're looking at these companies and you're investing long-term, this is why you're going to look at earnings, because the earnings are actually going to show you what the fundamentals are of each company, and the fundamentals are what long-term investors pay attention to. Price action is what traders pay attention to. So that's the big difference. Investors pay attention to fundamentals, traders pay attention to price action. So this is why, it became so much easier for me to be able to take my emotions out of investing when I realized that the fundamentals are way more important when it comes to actual long-term investing. I look back to myself when I was trading, when the COVID crash hit, and I had Snapchat. Snapchat was one of those stocks. I bought it around $18, and then it started to collapse all the way down. So I ended up buying back in around $8 and $9 to bring my cost basis down, because I still had faith in the company. I thought it was going to do well. And then I got to the point where I was like, oh man, I'm so mad I'm still in the red. This is one of the stocks I don't have a high conviction in, so I want to sell out. So as soon as I got to break even, I sold. It was around $15.50. I sold my Snapchat. I'm like, good. I was glad. I was patient. I waited. I didn't take a loss on it. I was able to break even, and I'm out. And then the stock ran up to $80. And I'm like, kicking myself for not waiting, not being patient on it. But I stuck to my guns. I stuck to my strategy because I was not comfortable holding the stock. I had no idea where it was going to go in the future. So because I was paying attention to it day by day, I'm like, let me get out. Stock runs up. And then you look at it today, and guess what? It closed under $14 today, lower than what I sold it for a year and a half ago. So you got to pay attention to these things, because in a market like this, these massive swings are going on. You will always get more opportunities. There are always other stocks out there to buy and make money on. And yes, I did not make any money on Snapchat at the time, but I made a ton of money on other stocks. I sold out of that one and I put that money into something else. I think I put it into AMD, and I made good money on AMD. So always options and opportunities out there, always going to learn. We all make those kind of mistakes, but again, this is where we learn and pay attention. And then you got to learn who you are as an investor yourself. Are you a trader or are you an investor? That was one of those light bulb moments that helped me realize that I'm more of an investor than a trader, because for me, trading, my emotions don't do well when it comes to trading. So I went over to the fundamentals, I went to long-term investing, and I've been so much more successful since. Let me know your thoughts in the comments. Are you a trader or are you an investor? And maybe you could be both, because I know I do have some stocks that I do trade. So if you are an investor, let me know what stocks you're investing in. And if you're a trader, let me know what stocks you are trading. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is in the description. And if you'd like to support the channel any further, I do have a Patreon, that link is also in the description. Thank you so much. Have a great one.